A couple of weeks ago, I talked about Marathon Petroleum, subject, of course, of activism pressure from Elliott, also D.E. Shaw in there as well. And they do announce earnings this morning and an update on their strategic review, which is got some news involved in it. But you can see the stock selling off rather sizably. It was a few weeks ago I said likely to immediately initiate a spin of Speedway, continue to review potential divestiture in some fashion of the midstream assets, and Mr. Heminger, the longtime CEO, chairman and CEO, expected to step down.
Right.
It all happened. That's what they announced this morning. Heminger says he'll retire next year in 2020. They're immediately looking for his replacement, and they're spinning off Speedway. This is, people who drive a lot probably know Speedway. It's
sure. It's the largest.
Popular, the largest, and it will be potentially the largest publicly traded independent gas station company. Stores. Right now, it's embedded in the company. It's going to take a while to get it to get there, perhaps a year or so before it's an independent company. But they're saying the value right now within Marathon, given the multiple that company gets, is about $10 billion. The thing does $1.5 billion in EBITDA, so they think that it is amongst the best run, with the highest margins, and therefore could, Jim, garner perhaps a valuation in the public markets of some $15 to $18 billion, hence the creation of said value, not being seen that way in the markets today.
Look, they're unlocking the value of the midstream business. David, I don't want a midstream business. It's a terrible business right now.
My understanding is that's a lot harder to do in terms of it's intertwined with the other business.
Right. I agree with that.
Marathon, and very tough to separate. That is at least what people who've been working on looking at this tell me. That that's just going to be a much tougher separation. Not that they aren't thinking about it or trying, but it's harder to get done. Speedway was easier. They built it, obviously, the Endeavor deal, the Hess deal. They built it significantly
but I don't
from $400 million to $1.5 billion in EBITDA through deals for the most part. That's an easier.
In the end, David, it has something to do with oil and gas. And if it has something to do with oil and gas, I don't want to touch it. By the way, how's Aramco doing with that deal, that $1 trillion deal? That's what I really want. Like a hole in the head, like a bolt to the head, which is, of course, why you need Beyond Meat, because you spare the cows.
Energy is the worst sector of the month. All these talk about blind headlines about Aramco unable to lock up cornerstone investors. Are we going to learn more on Sunday?
Never a response to the attack they took.
No. Peloton, Smile Direct, Aramco. In other words, stay away.
Stay away. Yeah. Aramco would be the most valuable company in the world.
You didn't get that at all.
68 billion in profits so far this year.
They have a 5% yield, but you know what? BP has a 6.5% yield. They didn't increase the dividend, so the stock got hammered. But would you like a 6.5% increase, 6.5% yield with a company that is an honest, terrific company, or would you like a black box like Aramco? Who the heck knows what they're doing?
Well, they're taking a lot of oil out of the ground and selling it
10 million barrel. Yeah. Well, that's
they're
good.
Doing that.
It's oil. No one wants oil.